So chaos is something that we have to actively manage, and something that we have to weave through, because chaos isn't something that we aren't supposed to understand. The chaos is something we can understand, and it's on us to gain the information to do so. Embrace uncertainty.
I think that's just beautiful. We can just leave that. Embrace uncertainty.
Embrace uncertainty. We have to be okay with being uncertain and throwing ourselves into the fire and not being afraid of the work and just going for it.
Yeah.
Even though it's uncertain.
Yeah.
Like Myron Golden said, we're going to do something. There's going to be an outcome eventually.
Yeah.
So I'm all matter of the input. Episode number 1, Chaos Theory, Crowd Behavior, and Financial Markets. Hello, everybody. Welcome to the very first episode of the In Full Bloom Show.
2025.
Damn it, that was the wrong button. Hold on.
It's orange.
Wait.
Nice.
Yes, we were formerly the Bloom Podcast, but I've done a little rebrand over the last couple months and launching with this first episode on a really, really interesting and exciting topic, and one that has been boggling our minds for the last 8-10 months and possibly our lifetime, and we haven't even known it. Without further ado, my name is Quentin Gulliford. I'm with my co-host, business partner, Marcus Williams. And welcome to this very special first episode of the In Full Bloom Show. And in this new restructured model, if you will, of the Bloom Podcast, our focus is going to be to simplify the complex, connect the dots, and explore how the principles that drive life also shape the markets and vice versa. Today, in this episode, we're diving into something both fascinating and practical. And that is chaos theory and crowd behavior. Hold on to those two concepts for us, if you will. But we're not just talking theory here. We'll explore how these ideas apply to everything around us, markets, nature, decision-making, and even the way we live our lives. Here's on the agenda. I got 3 things for you. The psychology of the crowd, why people behave the way they do in groups, and how this impacts the markets. Secondly, chaos theory, what it teaches us about finding order in the seemingly random. And 3, most importantly, actionable insights and trading strategies. You and me, and us, I'm trying to get better every day. VXT. And again, strategies that we can apply today and be inspired by the concepts in which we will be talking about today. Now, you might be thinking, maybe as I thought when it comes to chaos theory, crowd behavior. With chaos theory, isn't that just some science jargon for randomness? Or crowd behavior, isn't that just mobs acting irrationally? But stick with us, because here's the kicker. Chaos is not random. We will make that apparent, particularly in the markets. And there's structure to the madness. And crowd behavior, it's far more predictable and profitable than you might think. You just have to know where to look. By the end of this episode, you will have a whole new perspective on how the world operates and a sharper toolkit for navigating financial markets and life. It's pretty big. Life's pretty big. So let's not waste time. Let's get right into it. Marcus, how you doing, my brother?
I'm doing pretty exceptional.
What has brought you here to talking about things like chaos theory and crowd behavior and esoteric concepts in the financial markets? What have the last 8 to 10 months looked like for a co-founder and CEO of Bloom Entities?
Yeah, I mean, being involved in these markets, man, we definitely have to be looking for just a continuous edge. That's constantly what I think about, is just continuously finding an edge. Just, we have our edge with our strategy, the way we like to enter trades, exit trades. But that is just such a small part of, being involved in the markets and being able to capitalize on the opportunities. So now, we're getting into what it seems like to be stuff that's been around for a while, in terms of the events that resemble, a crowd mentality, or that what seems to be super random, but then some unpredictable event happens, and then we get particular market movements or something goes down with the economy. But yeah, so just gearing up for this podcast, man. Glad to be back in the stew.
Yeah, it feels strange almost.
Yeah,
It's been a while,
man. It's been a while, but like I remember why I enjoy it, especially when it's kind of like learning. I mean, what we've all experienced. You don't really enjoy learning things that you don't like. And so when we're sitting here talking about stuff we actually enjoy, actually involve ourselves with. I love it, man. I love it. So it's good to be back. But yeah, I don't know if I answered any of the questions.
Yeah, no, that was a fantastic answer. That was a fantastic answer. And you led me to something I wanted to, kind of enlighten the audience too. And so with the new way we're approaching this podcast is Marcus and I are going to sit down at any given time during the weeks and the months and the years in which we are alive. And we will establish things that we're interested in, curious about, and things we're genuinely interested in learning. And so the concepts in which we're going to talk about today are concepts Marcus and I talked about a couple weeks ago. And so leading up to this episode, we have been learning about something that has both intrigued us and allowed us to learn a lot more about the markets and a lot just about global economics and macro, which is profoundly our desired approach, our intended approach, following the macro to allow us to gain an edge in the markets, as we will talk about and as you guys will learn about in the continuation of the In Full Bloom podcast. And so what we'll start with, we'll start with something that's been dominating the headlines, something that's very complex, but inevitably very, very tragic, very, very sad, particularly for the people involved. And that is the Los Angeles wildfires. Surely we've all, at this point, we are recording this January 20th, 2025. Surely all of us at this point have become aware of the tragic wildfires in Los Angeles. Of course, praying for everybody involved and just hoping everybody can stay as safe as possible and hope that the community enriches itself over the next couple of years. But I think this event leads to a very interesting conversation, a very dynamic conversation, and we'll work our best, Marcus and I will, to wrap our heads around this and how this could possibly impact the markets and could possibly impact your life, my life, some people of everyday citizens. So just some current data that I pulled on the LA fires. So as of January 19th, 2025, the Palisades fires have burned over 23,700 acres and is about 76% contained. At least 27 lives have tragically been lost, and over 12,000 structures have been destroyed or damaged. Entire neighborhoods in the Pacific Palisades, including homes of A-list celebrities, yada, 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 yada. And so I'll lead into why we would consider something like a wildfire to be what we'd call a chaotic system. Again, we're going to kind of prepare us to get into a much broader, deeper conversation about chaotic systems and chaos. So just bear with us as we work through this. And so wildfire, why am I struggling to say that? Wildfires. Somebody else tell me that's something that's difficult to say. Maybe I'm just being dumb. Wildfires are an incredible display of chaos theory. Tiny changes in wind direction, humidity, or temperature can determine whether a fire spreads uncontrollably or fizzles out. That's why predicting them is so difficult. So think about lighting a match near a pile of leaves on a dry summer evening in Phoenix, Arizona. Maybe somewhere near Lake Pleasant, close to where I grew up, about 10 miles north, not too close. You light that match, so depending on the day, depending on how the wind blows, that match you lit and dropped could burn in the entire area of Lake Pleasant, or it could just fizzle out and land in the street or something. So what chaos theory is talking about, what chaos theory is a concept much broader than weather systems, and it really leads into the financial markets. So at its core, Chaos theory is a study of systems that are highly sensitive to initial conditions. A small change at the start can lead to massive differences down the line. Marcus, when you were first researching chaos theory and the concept of chaos theory, what was your first reaction, particularly how it relates to the financial markets?
Yeah, my first reaction was, wow, this is something that we literally deal with every day, like trading, especially when it comes to maybe there's a speech that day from a Fed member, or even the economic indicators when we're talking about those little results, those factors that then have implications for the rest of the week or the next month on the market and whatnot. So when I first looked at it, I was like, wow, so this is something that I have been utilizing in a way, but didn't realize there was a whole theory around it. And it's, like I said, something that's been, documented and obviously has references like the butterfly effect and something that I just got into. So yeah, I didn't realize just the studies already behind the randomness within systems, not even just the markets, just in systems in general. I just told you a second ago about the pet rock. That was one of the first things that came up in something like that, because it was somewhat of a just a weird type of event that then caused all these people to buy it, and it all blended into what we'll get into with market sentiment and all that type of stuff. But yeah, it was initially I wasn't shocked, but I was surprised it was something that, like I said, we use.
Yeah, right. And when I think of these systems, and on your story, you brought up something that intrigued me and made me think about just the cyclical nature of things and how systems can be predictable in a way, no matter how chaotic they are, because there's humans behind it.
Yes.
And humans are very predictable. In large numbers, human behavior is very, very, very predictable. So I think of that, and when I think of how it integrates with the financial markets, inevitably people are going to be looking at the main sources of information for the most part. Hence the development of a crowd and of general sentiment. But again, just and talking about how these two concepts, crowd behavior and chaos theory, kind of integrate. We just have to be very keen on knowing where to find our information from, and not letting the abundance of information deter us from sitting down by ourselves and making decisions for ourselves, and forming our own unique thoughts on things. And so what I want to talk about now, and I really want to get into just how this is applicable to us as traders, understanding these concepts. So when you go about approaching your trading weeks, your trading sessions, just your approach to involving yourself in the financial markets, what do you do when it comes to finding information? How do you do that? How do you go about it? Maybe talk about why that process is important to you. And just give our listeners just a concept of what that process looks like in terms of getting information, absorbing it, and making adjustments or lack thereof to your strategy to find an edge in the market.
Yeah, so I would say on a day-to-day, when I'm doom scrolling on routers. I do I got it on my phone, so I'm on routers. Very credible source, been reporting on the markets, over a handful of decades. I don't know the exact year, somewhere in the 19s. But that's kind of where I start, and anything that I see there that is impacting the U.S., I get into it. I see what's actually going on and how it affects the money. Or how it affects the outlook on the dollar as, the global power, how it affects, the economy, like literally anything that may signal, and that's pretty much what Reuters does. Anything that's on there is going to be as some type of indicator or signal or potential minor, like we're talking about with chaos. It could be a very small thing that is going to have really large implications. So on a day-to-day, I start there, but the morning of my trading session, what I do is right when I look at my phone, I go to my FX book. And I just refresh the daily news for that day, and I see what news is going on that day, and then based on my current or previous understanding of what the market is looking at to make that next move, or it's just so funny because every week there's the big move, or every other day is the big move, and that you're waiting for news to make that big move, but there is certain data that has larger impact than others. So based on how that was setting up for that week, if that news falls within that, then I'm waiting to see what those results come out as. I do sometimes I try to get some insight on those news folders, but there's no way to kind of get an early indication of what the report may be. But yeah, that's pretty much my product. Reuters, man. TradingView, of course, when we're on TradingView. Just because those get me thinking, and when I start thinking, then I start searching for other answers from other sources. You know what I'm saying? Then, of course, ChatGPT and utilizing the abundance of resources that ChatGPT compiles into one explanation for me. So. Yeah, that's pretty much still developing on it though, but yeah.
Yeah, it's definitely a very fluid process, at least for me, when it comes to just the times in which and what my sessions look like when I just sit down to do research. Now at the turn of the new year, my goal has been at least to do an hour a day of just not trading, but just researching and. I tie back testing into that 1 hour time period in my days, but it looked a lot different in the past. So I'm again, like you said, I'm still trying to find the systems that
for sure
work best for me. Not necessarily work best for me, it's the ones I can find that I can be consistent with. Yeah. At the end of the day, but I want to highlight the usage of the washing machine. Or just tell our listeners what. We are talking about
the washing machine.
The washing machine
is AI. Is literally putting your thoughts in. Let's just say a washing machine. Putting your thoughts, your ideas, your questions, your just anything. Just your problems. You're putting it into washing machine, and then you're giving it a spin, and it's giving you something a lot cleaner than what you gave it, and a lot more detailed. But yeah, it's AI. Honestly, I like to just say you have an assistant that can do anything at your fingertips, or that can help you do anything at your fingertips. Because
Oh yeah, just when it comes to productivity.
Yeah.
And we'll kind of keep the AI conversation mostly tied to its ability for us to do research for us.
Yes.
Of course, it's an incredible tool that has so much power.
Yes.
But just speaking to the value it has when it comes to conducting research.
For sure.
The research I did for crowd theory and market sentiment and all our debt cycle research, that started in ChatGPT.
Yes.
Started right there. And then, of course, you can ask it the main sources in which it pulls the information from and which it'll populate. And then you can go to the main source. So you can end up doing really, really good sound research started in AI, which is very, very, very valuable.
Man, for sure. And what you said with the process too, that's one thing I have up in the morning. When I'm looking at news, when I'm looking at these articles, when I'm looking at this stuff, I have AI up with me because I'm going to have thoughts about that article. And then because I'm trying to make sure I'm understanding how it's going to impact, right? Because if I can understand how it impacts just from an initial headline, I feel like I'm going to gain an edge, right? So The AI when it comes to research and learning is, dude. Like I can't imagine like having this like years ago.
Oh man,
Bro, what?
Oh man, just this again, just the speed and productivity.
Yeah.
But what I want people to realize when it comes to typing in things to AI,
Yeah.
you can talk to it. Like Marcus said, like you'll literally have it sitting next to you and just have a conversation with it exactly how
Yes.
we're having a
For
conversation
sure.
right now. Hey, what is crowd theory? What the heck is that? Explain it to me as if I'm a first grader. You can say something like
Yeah.
that, and it will literally explain some esoteric concept to you as if you were a first grader.
Yeah.
So learning concepts like this has never been any easier
Any easier.
than it is right now. But yeah, I'm with you just when it comes to my process.
Yeah.
Here I'm gonna I gotta make a bank deposit here. I might go tonight. Maybe I'll go tomorrow morning. I'm gonna fund the live account, and get deep into my just workflow, trading workflow. So about 2.5 months ago, gold took me out. Was having great success. And then, as you know, all it takes is that one mistake on that one day for it all to be gone. This is exactly what happened.
Yeah.
You're in a position, and I'm sure any trader who listens to this has been in that situation where you get in big drawdown, and you're like, knowing the market's gonna turn around at some point. Then it keeps on going, boom, 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 boom. And you're like, okay, it's gotten down to this point. All right, I'm gonna make a trade here. So when it reverses, I'm good. I can take some profit, cut my losses a little bit, and then it just keeps on going and going and going. And then you're sick, and then you're in two positions.
Yeah.
That are both against you. So I got myself into a position like that. My lesson there was just the preservation of capital. Even when you're in a really tough spot, just pull yourself out of it. And when you've gone against your trade plan and you're in a position, there is managing we can do.
Yeah.
And there is safety precautions we can make. But there's always some limits.
Yeah.
There's always some limits.
You think that's like that was needed? I feel like
they're all needed.
Yeah, they're all needed, right?
Needed.
Exactly.
They're all needed.
Doesn't matter.
That's what's so important. And how we approach this, volume times time. Every time you get your legs taken out from under you, every time you lose the prop account, whatever it is. Man, I needed that.
Yeah, and I'd say even too, like, not even in trading. Like, I really thought about that too a little bit recently because I've been up and down, with the trading stuff. Just in terms of strictly talking P&L, just because it's a long journey, like we know. But the development, I feel like, has it says more than the money can even say right now. But taking risks, bro, like that is sometimes we take an L like that, right? And it doesn't have to be trading. It could be something that you had your heart set on, maybe a job, maybe a career, maybe something like you had your heart set on and you took a leap for it, and then it didn't work out, right? And then you don't ever take any more chances or risks or after that. And so my main focus, just throughout the last, 3 to 6 months, has been just strictly thinking in probabilities and just accepting the risk. And when I've been down now, I'm just like, all right, I'll just cut it. Because I can always get back in if it does look good. But I used to be like hopeful in a way, you know what I'm saying? Like, oh, my analysis is telling me I got this area right here is gonna bounce off. So I just wanted to get that out in terms of, but that it may be something else in our lives, even me personally, that I know that I've maybe held back on pursuing again because of those drawbacks. So.
Yeah, no. That's good. That's good to share. That's good for people to hear. There's so much struggle in the journey of a trader.
Yeah.
And I think anybody that understands how it works or knows somebody that understands how it works would be the first ones to tell you that in the first 5 years, you might lose thousands of dollars and not make a thing. But like you said, Marcus, the important part is the development, and that's what keeps you in it. You feel when your reading on inflation was spot on in terms of you trading XAU USD on a London New York overlap on a Tuesday morning, when your analysis was spot on, like feeling that even if you have that moment where you get your legs taken out from under you, you still have that moment. And of course you'll have the mistakes along the way. But I truly believe it's something that not necessarily clicks. I don't like that terminology because I've heard that before from traders. It clicks at some point. I think it's much more a product of the work you put in and the time you spend. And again, not like exuberant amounts of time. Of course, you can. Like that's what's so beautiful about trading is you can speed up, slow down, and do whatever. You're in charge of yourself. But you becoming successful, you becoming successful is a matter of making the necessary mistakes. Just sticking with it, man. Just sticking with it.
Yeah. Now it made me think about too. Just tying it back into the chaos theory and just understanding that the smallest events could have large impacts. So we don't know that next candle, like we have no idea. And so that's why risk management. Risk management. So important.
And for our listeners to know, and again, we're gonna tie in chaos theory and crowd theory. We're gonna weave it in the conversation in this show today. But the financial markets really are a textbook example of chaos. So the prices we see, all those candlesticks, are influenced by countless factors: economic data, geopolitical events, and investor sentiment, and even the tiniest shift in one of those can spark massive chain reactions. We've seen that, especially, again, we're recording this on December 20th, 2025. For those who don't know, January 20th, President Trump was inaugurated today as our 47th president of the United States of America. And we've seen, particularly, through the election, as crazy as that was, particularly for those that's living in the States, especially somewhere like Arizona, seeing just the various events that have gone on and the market's reaction to those events, it's absolutely astounding. It's phenomenal. It's very fascinating when you think of something like chaos.
No, for sure, and it's dope too because this was the first year that I've been trading, especially involved in the markets like I am now during an election. So it was just like literally the T word. Every time you saw that tariff word being thrown out there, like in a news article or Trump said something in some type of report, or the markets would go crazy. The markets would go crazy. In terms of the sentiment, right? You would see articles coming out saying, bearish, whatever the case may be. But we were talking about the crowd theory. We were talking about the inauguration, right? I brought up tariffs. We understand just being involved with the markets and learning that, first of all, all the indicators we follow, they're on a long term. They're on a macro time frame, macroeconomics. It's on a bird's eye view type of scale. So understanding that, damn, any one of these events that goes down right now, like this inauguration, right, could have large implications on our economy for the next year, right? In terms of maybe, the gold just finds crazy highs, and we have to be able to, in a way, know what we have to be able to interpret each event as if they are those unpredictable events that could shake everything. You know what I'm saying? Like
you have to recognize the power that those events have.
Like,
There's a
because you
ripple
don't
effect.
know
Yeah.
the effect that event is going to actually have. And you know, like we're all about like personal growth over here. So even when I think about that, like we don't know on a daily, like what we're doing, that the smallest thing that we're not doing, how it could have really large implications on our future. So that chaos theory has been really, really interesting, bro. As we've continuously talked about it, you know, now you got the crypto market, and that's one of the biggest ones you're seeing. Honestly, that chaos type of unpredictable events, you know, causing great impact.
Yeah, and when it comes to the crypto, and that kind of builds us nicely into incorporating crowd behavior a little bit more in the conversation here. And so, particularly with crypto, you know, we saw everybody experience the Bitcoin boom, and just the other, you know, when it comes to the meme coins and pumping and dump, just like that whole side of the markets. You know, in markets, crowd behavior leads to things like bubbles and crashes. Like I said, we've seen this. The Bitcoin bubble, of course. When everybody starts buying, prices rise to an exorbitant amount, and more people jump in, creating a feedback loop. And the same thing happens when people panic and sell. And so when we're, Marcus, when we approach the sentiment aspect of things and us gauging what the markets are, because it's very easy to fall into the crowd.
Yeah.
And sometimes the crowd's right. Like it's not a thing where like, okay, the crowd's always wrong. You should go against the crowd every single time. But when it comes to just reading sentiment, reading articles, this resource, that resource, how do you go about finding your own sentiment? I mean, not necessarily avoiding the crowd, but just not being with the crowd, making your own decisions.
Yeah, so me, I like looking at things from a really practical, you know, pragmatic type of, you know, approach. Just super logically, like I like to see in those articles, like sometimes the people we've joked about this in the past too, you know, when I see like strategist or analyst or, you know, those type of, I just wonder how they get said titles. Because sometimes they're not even looking at it in a truly logical and like bird's eye view macro type of way. And so it has to come, like I wouldn't be able to discern the sentiment if I didn't know what I was talking about or know what I was looking at or know what I was reading. Like I wouldn't know. So I understand why people fall into the crowd, because for one, most people, because I was a victim of this as well before we really got into the markets. Like before, really, like honestly, like a year ago, even when I did trade, I was not into fundamentals like that, like at all.
Not even close.
At all.
Not even
like,
close.
I mean, I knew about Forex Factory, but I'm just looking to see if the number's green, red, or neutral. And then, you know what I'm saying? I'm not really knowing the implications that it has.
It's very, very linear, straightforward how we approach it.
Super. And so now that, you know, we've been involved in the markets, I'm able to form my own sentiment, like, and if sometimes it's with the crowd, sometimes it's not with the crowd. But I just, like I said, I look at things from a logical perspective. If I can understand what's going on, and at this point, like I feel like I have a pretty sound understanding on when I see a certain article or even like the tariffs and stuff like that. Like I had my own perspective on how that could potentially impact the economy, and those are risks I'm willing to live with. So I don't necessarily even, there is like a market sentiment thing on my FX book that I have taken a look at, but that almost like blinds my own perspective. Like I don't like seeing stuff like that in a way.
It kind of already puts like that presupposition in
exactly.
your mind. It already sways you.
Yeah, and it's a good indicator. Like especially when we're talking about crypto, like on Core Market Cap, there's something called the Fear and Greed Index, which is kind of like that similar type of look. And so I'm not completely partial to just really knowing what the sentiment is, but I'm just thankful that I understand what's going on to where I just form my own sentiment. Just form my, because I mean,
and I think one question that people might think is, okay, with if you understand all the fundamentals, you have a good understanding of the macro. Why doesn't every single trade work out?
Yeah, because of that random factor. Like because it's that random factor. Yeah,
and the that factor and the ripple effect and how like your sentiment could be completely right, and the market could eventually do exactly what you were thinking. Yes. But just the timing could be off.
Yes.
You could, or something could have happened. Some manipulation could have happened. Something happened in the Middle East. So, the position goes against you and you're past your risk and it pops you out. Yes. Or by the time the move ends and it goes in the way in which you want or you intend, your legs are taken out from underneath you. Yeah. It's very intricate. And I think it truly takes time to kind of figure out not just the balance, but more importantly, the timing of layering the acquisition and the usage of the information we collect on the macro side, on the fundamental side, and just the physical execution, the mechanics of executing the trade and watching the market.
Yeah. No, that's why, my best, the thing that I try to do the most is have that, not the largest bird's eye view, but like right under that. Because maybe the largest bird's eye view, you're trading on the daily, you're taking daily trades. I am trying to get in there. And this is the other thing I'll say too. This is something I Inverse VXT kind of is like involved in this because let's say I have my sentiment and like news comes out, whatever, articles, and I'm bullish, right? And I'm bullish. But I noticed we may have been in, a short-term trend, or there are economic indicator that just recently came out that signals maybe we're going to have a little bit of correction. Still going to try to execute on that short-term opportunity, even if my sentiment was lying on another side. But it's kind of like the freaking, and this is also something based on our development as freaking entrepreneurs, bro, CEOs, people. I freaking know the law of polarity. Never knew that in my life, but I've always had the thought of, damn, nothing is one-sided, when it comes to events. And so when it comes to my sentiment, it's not one-sided. It leans sometimes on a certain side, and we can use variables to lean it on a certain side, but we always have to be aware of that other side so we're not getting our legs taken out.
Yeah, and here we're really getting into how we approach just the mechanics of trading, is our strategy and everything like that. And I think the way trading is to be approached is exactly how we are approaching it. I'm not just saying that just to amp us up, but just the mixture, again, the important piece is the mixture, the combination of the fundamentals and the technicals. For those who are familiar with those terms, you do a little Google search on what's the difference between the fundamentals of Forex trading, whatever, futures, options, whatever, fundamentals versus technicals. It's the combination of those along with top-down analysis.
Yes.
The approaching the markets from a top-down perspective, along with our understanding of the macro, it truly paints like a really big, very like as picturesque of a picture that's not a physical picture. We just understand what's going on around us. Like when we see this bill passed, like you're like, okay, that's because of this, this, and this. We see China's going to do this because this and this. So, but just having a broad scope of everything and using that broad scope to just finer tune our approach to what's going on at any given day, any given I think we're doing it the right way.
Yeah, and I'll say where people will slip up, and I feel like I've even come victim to this, is not realizing it's the long game. Like, it's the long game. So those macros, like our bird's eye view, it has to be based on a long game. Like, you can't, if you can scout, that's fine. I'm not saying don't scout. I'm just saying if you're looking at the fundamentals, you have to understand it's going to happen over a long term. Like, just simply put, and that's something I've really had to focus on when it comes to those, because you expect things to play out right when you see it, and that's almost never the case.
It's very interesting, because I was thinking about this today. I've lost this thought a couple of times. I'm gonna try and hold on to it. So the things that happen and things that go on, the major events,
Yes,
are things that have been in the works for sometimes decades. I don't know why that took me so long to hold on to. I apologize. So if we're just curious enough, over time, and like I said, we've like I've been doing research like this for 8 months, so I'm still at the very beginning.
Facts.
But you end up catching up to what's really going to happen, because breadcrumbs are being laid, and things, especially at that level, that high level, that are impacting the markets in a major way, don't just happen in a day. Don't just happen. Don't just drop at the news for it. Like, these things have been working up to this, and so you brought up like the American Express and XRP, and just looking at the receipts of like, okay, like this is something that's kind of in the conversation now, but like going back to 2017, they had articles on their website about this.
8 years ago.
8 years ago, and we're thinking it's just now being big. Like, that's the general like kind of sentiment.
No, for sure.
That's what's been really fascinating for me.
And to that point, when we think about the crowd too, like, that's why some people, they will panic sell. They will not get in at all. They because they don't have the actual, they're not looking, they're not curious enough. You said that, which is, I forgot who I was listening to. I think it was Jim Rohn. Probably Jim Rohn. But just keeping the curiosity of a child. And I feel like within these markets, and the more mature that I've become, the more acclimated to the real world that I've gotten, raising my own family and whatnot, like, being involved in the market and the economy is like, it's just something about it that you start to see how it all works, like everything works together, like, you know what I'm saying? Like,
and to me, it's really almost like if the world and the economy was a big ship, the market, like the candlesticks, are like the wiring of that goes like through the entire ship. Anytime I sit down and trade, and I watch the market, when I see something happen in the news and I see the reaction of the market, it truly is just absolutely fascinating. And that's what like will honestly keep me, like, no matter what happens, along with me understanding like just over time it'll happen. But just understanding that over the course of time, man, I'm in this for the long haul. It's something that I don't necessarily just point the dollar and cents value of it, bro. But just like me, my family, what I want to create, for when it comes to generational wealth, like as big as it can get. I think it starts with the work, the research that we're doing.
Even being a voice, bro, for people, because I feel like, thinking between us two, like, we have people that are close to us, that trust us and whatnot, and it's not to say, they may be not doing the research, maybe they can't, maybe they don't know how. So like, being that as well is what we'll also hold on strong to. Because like you said, it's not always about the dollars, and in this case, that's just like a very, it's a big portion, like in terms of how we can utilize it, but it's just so small, just because there's just so much of it. You realize there's just so much of it, bro. There's just so much of it. So, just about VXT.
VXT.
Because over time it's gonna happen.
Yeah. One thing I wanted to touch on, kind of aside from trading,
Yeah.
something that I think about, kind of goes to our bloom principles a little bit,
Mm-hmm.
but just the when it comes to chaos theory,
Yeah.
when it comes to ripple effects, when it comes to the butterfly effect, I want to take a moment to just all of us take a second to appreciate the impact us all, me, Marcus, everybody listening to this, the impact just being a good person, a loving person, a caring person is how magnificent and how the magnitude of that.
Yes.
Just the amount of people we come across every single day. Part of our approach here in the Info Bloom Show with our business was bloom. It's not just to bloom in our finances and our trading, but just to bloom as people. And I surely recognize, and know, Marcus, you recognize just how us being just chivalrous, having manners, us treating people, us being in the service industry, we experience this every single day. Just the amount of people we come across, and just the importance and the weight we put on ourselves to just leave good impressions on people.
Yeah.
So I just wanted to take a moment to emphasize that.
Absolutely.
Thank you, everybody.
Great work.
Thank you. So the last thing I want to touch on, I want to just kind of tie this into something that's very, very useful for other traders, something that we've learned, something that we've adapted in our trading, that we know is a very good protocol, very good procedure for us to do. Is Marcus, how do we execute upon top-down analysis for people who want to start utilizing the bigger picture to start to implement their top-down analysis workflow, if you will? What does that look like on the trading view side of things? So very particular to the mechanics and the technicals.
Yeah. So if you know where the time frames are, you're gonna want to make sure you have the daily and even the weekly too, if you want. I don't always use the weekly, just because I know I can look at 7 candles on the daily and that be my week. So I like to use the weekly, the daily. But then I'm just going on that daily chart and I'm looking for the daily trend. Just because, like, in terms, I'm looking on the daily for a trend, because I know that if there's like 60 candles there, that's the trend over the last 2 months. Right, so I'm getting my bird's eye view in the large picture, the bigger picture from that, and then I'm probably going to the news. Like, before I go lower than that, I'm probably going to the news on TradingView, Reuters, and just seeing what the whatever pair you're trading. It could be a stock. I mean, because if it's stocks, you're looking at specific companies, it could be indexes, but you just have to find out what is making those, like I said, stocks, currencies move, like who's behind them. In this case, let's just refer to, I do the dollar to yen. Let's refer to UJ, we'll call it for short. So I'm going to be looking for anything that's talking about the dollar in the news, and I'm looking for anything that's talking about the yen. Like, it could be from Prime Minister of Japan, Bank of Japan, interest rate, sentiment, anything at all, just so I can see and get an idea of the potential trajectory of how these news articles could impact this daily chart. And then, I have structures that I look for like decision-making levels, we call them, formerly known as support and resistance, or supply and demand levels. So I have a structure that I'm looking for, 3 candles, super simple, on my daily chart. And I got my daily trend. And then I trickle down after I've gone over the news, trickle down to, I'll just go straight to the 8-hour, check that one there, 1 hour. And then I stop at the 1 hour, and then that is my bird's eye view after I've gotten to the 1 hour. And that's where I establish, to myself, okay, like, I understand this is happening, we got this time frame, is doing this. But then I always just refer back, okay, but on the news level, on the macro level, this is what, we're talking about here. So then I just refer back to the daily trend. So daily, daily 8 hour, 4 hour if you want, but I go daily 8 hour, 1 hour. Boom, I'm done.
Simple as that.
Simple as that. And the same thing I'm looking for on the daily. So right, the 3 candle structure and the trend. I'm looking for that same thing on the 8 hour and the 1 hour. Like I'm looking for, I like to sandwich price, right? So I'm looking for that 3 candle structure above price, 3 candle structure below price, sandwich price on each time frame, daily, 8 hour, 1 hour, and then my trend.
Yeah, beautiful. And what's so nice about TradingView, and just when it comes to just the mechanics of us trading, or our individual selves, this process can look different for any one of us.
Yes.
My process looks different than Marcus's process. But I will say, and this is the main point I want to make, is it essentially is the same. We're utilizing the news, and we're utilizing multiple different time frames from our weekly, daily, boiling it down to the 5 minute for me, in which that's the time frame in which I like to execute my trades on. Yes. The 1 minute and the 5 minute. 1 minute when I'm getting very particular in where I want to enter. But on each individual time frame that we work through, like Marcus said, I'm looking for exactly the same things. I'm looking for my decision making levels. I'm looking for my areas of inefficient price. And I'm looking for areas of liquidity in which price to take out. And it's really simple as that. Yeah. And so when it comes to me and weighing in the news and everything, I'm like, okay, I have these areas marked up on my chart. What are the macros telling me? Okay, macros are telling me, okay, I'm looking for maybe a little bit of a bullish push here over the next couple of hours. Okay, I got some liquidity there. I got an area of inefficiency there. I'm going to target that area. Yeah. Just depending on the play, I might put my take profit right in that area, somewhere in that area, at the edge of that area. I've been thinking I kind of want to go back to, just the max profit, and I get to 30 pips, man, pop myself out. Yeah. And just sticking with that. I've thought about doing that over the past couple of days. But that's what the process looks like for me. And then again, very similar to Marcus, but again, just the process in which we go about it is different, which is what's amazing about it.
And how many times have we been on the call together and like you say you got like a inefficiency at this price, and I'm like, yeah, I got that right there too. I got decision making level this. Oh yeah, I got that one right there too. Just because of, and that ultimately brings me back to a few things, because we're two different people analyzing a collective amount of behavior. Mm-hmm. And so based on our understanding of the market and of behavior, we find the same areas. Mm-hmm. And I just find that fascinating.
Right. And these areas, the things we're talking about, so I mentioned liquidity, areas of inefficient price, or fair value gaps, two phrases for the same concept. And then decision-making zones, decision-making levels, formerly known as, for us, supply-demand zones, support resistance levels.
I even throw in there freaking order blocks. Order blocks is something I've gotten into a lot recently.
Yep. So these are things that are, I promise you, are not very difficult to understand, to mark up, or see. Just like anything, as you say, volume times time, it will take a little bit of time. But if you assess a little bit of volume, you'll be able to understand it. If anybody wants to see how to do this, wants to see us do this, we trade live every Tuesday morning, 5:30 a.m. to 7:30 a.m.
pending.
We live in Arizona, so we don't pay attention to the time zones. So
it's Mountain Standard.
5:30 to 7:30 Arizona time. We'll call it that. I mean, we execute these principles every single day. We trade. As people may know, formerly we used to trade live every single day. This is kind of getting back to our crowd theory in a way, Marcus. Marcus and I, and who knows, maybe we might at some point we might get back to trading every single day live together. But we've seen the value in us conducting our trades and our trading sessions, when we're sitting down executing our trades, doing that not live, other than Tuesday. We're still taking care of you guys. Other than Tuesday, because we just see the value in it, and it's just a good day for Marcus and I to be on together, given this new format. So on the other days, it's just Marcus is doing his trading, doing his thing, and we're probably shooting texts back and forth to each other. But we don't want anything to get in the way of my frame of thought for me, Marcus's frame of thought for him. Even though 95 to 97% of the time it's exactly the same. Yeah. I'd say, and I'd venture to say almost 100% of the time our sentiment and what we think is going to happen is the same, but just the approach is different. And so when somebody's approach is different and you're trying to think and wrap your mind around something, it can just confuse things a little bit. We're creatures of trying new things and exploring. And so for right now, every Tuesday morning, 5:30 to 7:30 a.m. Arizona time, watch us execute these processes. Watch us stay away from the crowd. Watch us understand and dissect the chaos through all of our resources, and just observe us. Anybody that's thinking about trading, curious about it, this is a great opportunity for you to really see what it is, see what it's about. But yeah, Marcus, what do you, when it comes to the longevity of trading, when it comes to just integrating trading in your life, as we push on, as we pursue forward with everything we want to do, where will trading rank in terms of not necessarily its importance, but just how you balance it in your life?
Number one. Trading's number one. Like, just because it all comes back to trading, like everything that I care about looking at comes back to trading. Like, so the main things that I'm into right now, the markets. So when I say that, I'm just referring to the economy, really, and how that is going, how it's unfolding, the development of it, the future of it. Because then when I start to think about that, we can execute on real estate. There's so many things that goes down that rabbit hole of just knowing how the economy works. Right. AI is something that I care a lot about, just because productivity, we've talked about that, learning, research, and whatnot, and other systems that I feel like I have ideas that I want to be able to automate, right? And so that. But then the other one's trading, and that's just repetition and just constantly back testing and constantly refining my strategy, and not necessarily getting to a point where I'm trying to use every edge, but I have my initial edge, which it won't change, like the VXT strategy we use that we show when we're trading live on Tuesdays. That won't change, but there will be other things that I pull to add to that edge, and that can only be done by like constant repetition and involving myself with trading. So yeah, man, those are the trading is number one, just because of what it can provide for us. At the end of the day, so I want to give my most valid effort to that. But everything that I just mentioned it's like 1A, 1B. It's not like that 1, 2. It's like it might be 1AA.
Yeah. And so much how we approach things now is from an economic point of view.
Yeah. I was reading this book and it made me think about this when it comes to VXT. So if now when I think about VXT, the volume is the energy. Like the volume is the energy. So the volume is the energy, and then the time part is the time you spend on a task. So like, I don't know. I just had to say that. Yeah, no. Because when I was reading the book, I'm like, wow, VXT. Because he said something in there.
Really, all boy comes back down to VXT.
The energy you put in.
Volume times time. So these macro concepts, the importance of understanding the economy, and what I was getting into, what I lost my thought was just the economic point of view that we have, that we approach with, and with all the political division, even politics, we approach from, at least me, I approach from an economic point of view. And I think I'd encourage people to adopt that frame of mind. because we all want to do better economically speaking.
Absolutely.
That's something we can all agree on, no matter where we live, no matter where we're from.
Yeah.
Listen, we all want better for us. We all want better for our family, our kids, and so on. So if not, I'll pray for you.
I was gonna say, bro, because that's what impacts us. I was literally gonna post it on my story yesterday. Like, the only reason I used to look at politics differently, like I used to say, "Nah, I'm not trying to look at that," just because like I didn't like the people, or like, it wasn't a like I never really observed what I was being involved with. It was always like an emotional type of perspective. And, like the freaking economy is important, and the politics behind it are important because it's just, to me, it's just all about capitalizing. Like, and that may sound wrong, and that's fine, but I want to put my family in a particular position because nobody else is going to do it. You know what I'm saying?
Yeah, and I'm definitely getting the perspective. And again, this is what I lost my thought on. I would get it a couple of seconds later. But the spectrums, the polar ends of the spectrum are always the loudest.
Yeah.
And so when we look at things, when we look at Twitter, of course, one side of the argument is going to be that's all we're going to see, or the other side of the argument is all we're going to see. But Marcus, you being in service, me being in service, we experience this. Most people are in that middle freaking 20% of like which way you could sway. That's where 90% of the population is. So just understanding that like we all truly like want the same things.
For sure.
We want to live better lives. We want better, again, for ourselves, for our family. Approaching things from an economic point of view is just a very good, and not just good for our mental health, but just good for us financially.
Yeah.
Us learning more about economics makes us better at managing our money. It makes us better at investing.
Absolutely.
And so we live better lives instead of getting wrapped up in all these pop culture things instead of all these socio-political things. How will it affect the economy? Cool. I'm going to make money off of it.
Exactly. And you brought up a good point with the mental health thing too, because I feel like that's something that kind of may be underlooked in terms of how people's view on politics then affects how they live their life. Like they're like truly look at life and live their life because, so and so didn't get reelected or whatever the case may be, it's just interesting that the older like we talked about, the older that I've gotten, the more mature that we get, the more acclimated we get in the real world. You just start to kind of see by that loud side. Like you kind of starts, okay, who's not making noise? Like, what are they thinking? Or you find yourself fitting into that crowd more. So
and that's where we want to be at. And again, in this In Full Bloom show, us, Marcus and I, we with the utmost respect and love for every single person walking the earth, no matter the circumstance. Of course, maybe I shouldn't use the word love, but just respect for everybody in the world, because everybody knows something that I don't know, that we don't know, that Marcus doesn't know. Just having that the humility when it comes to just engaging with one another, and not getting so riled up when. I was at Venanzia's today. This is actually a very applicable story. There's these two older gentlemen. The Trump inauguration was on the TV. Okay. And they were very loudly and admittedly for the liberal side of things, the Kamala side of things. And they're very, very outspoken about their thoughts. And how not everybody's a Trump guy. That's what I heard one guy say really loud. Can you switch the channel? And the kid was like, but just seeing how people get so distracted and caught up into things that are designed to catch us up and distract us is crazy. Even people from all age demographics. But again, we encourage everybody to stay the course, stay the linear course, utilize good information always, when you're learning, when you're teaching, when you're just browsing, trying to fill your head up with knowledge, having a conversation. Approach things with firm knowledge and respect for the other person in which you're talking to.
Facts. And I would say too, just to add to that, just look at. I'm not gonna say just do something, but I just like to look at it logically, bro. That's literally my main thing. Logic with something like this on this scale, because it affects economics. What's logic normally makes sense because it comes back down to math, and that's what economy, money. It's just really all math over a very, very long period of time. So yeah, I had a few things written down though. I wanted to say. Okay. So this was just I had jotted this down before we started the pod. I just wanted to hold on to it because, as you've seen, thoughts tend to sway away. But it is in relation to the chaos theory and how the unpredictable events, the very small things that we may think have large impact. And I just wrote down the decisions you make will eventually, and I want to come back to that word really quick because I was listening to Myron Golden. That shout out Myron Golden. I think he got this from somebody else too. I forgot the dude's name though, but he said eventually is undefeated. So I was like, that's so good. Like eventually is really like eventually comes regardless. So I said here, the decisions you make will eventually produce an outcome, and it will either be your most desired outcome or the least most desired outcome. And so just tying it back to the chaos theory and our, Bloom being about growth and development, I just want to encourage everybody to choose the next best thing.
Next right thing.
Next best
Shout
thing.
out Coach Keeley.
Shout
out
next,
Coach Head.
Exactly.
Do the next right thing.
Exactly.
The next best thing. I love that you brought that up. That's something that I really think about very often. Yeah. Just when I go about my life. Just what's the next right thing I can do?
Yeah.
I'm just gonna do that instead of scrolling, getting distracted. Watching this. Just what's the next right thing? And I know the more times I get distracted and pull myself back, the more robust I'm making that process of me staying the linear course. I encourage everybody to do the same. For anybody that wants to follow the macros a little bit more, kind of follow some of the geopolitical events at a close level, but without doing too much work, our Bloom community is free for you guys to enter. Of course, we have subscriptions in which you can check out. Highly encourage you to do a little bit of research, look at some of the things that we provide, and make some decisions for yourself as far as how you want to just best approach your learning process when it comes to trading. But just at the surface level, just following the macros, understanding what's going on in the economy. Join that circle program. Join our Bloom Circle program platform. Links will be provided in the descriptions below, of course. Again, I'd highly encourage you guys just to interact with us. We have the Circle app on our phone, Marcus and I, so we can anytime shoot a message in there, shoot a thought, share an article, digest something real quick on a late Monday afternoon when we have a break at work, or on a late Saturday evening when I am on break at work. I want to have a close, just whenever we're in our Circle program, in our Circle, I keep saying that, in our Circle platform. And then we have the goal of engaging in there as much as possible, and sharing as much thoughts as possible with you guys, of course. Small community right now, but we have every intention of getting not just everyone in there, but the right people in there that preach the same things we're preaching and have the same goals and aspirations. Not same goals, but same kind of life or generation.
Yeah, and even
that we do,
and even don't even have to have the same sentiment as us.
Right.
Like I would love for people to be in there with an opposing view, just so I can debate, because I like to debate. But no, back to your point, the small community, real quick. Just Jim Rohn, gotta say it because his voice is currently saying in my head right now. But he says, "Do great when the amounts are few. Do great when the amounts are few."
That's a beautiful message from Marcus Williams, digested from the late, great Jim Rohn. So what did we take away from today's episode?
Recap.
Recap. Think about it for yourself for a sec. Push pause. Okay. So first, chaos theory teaches us that small changes have massive ripple effects. We've seen that in a lot of the conversation that we talked about today, a lot of the events in which that were brought up in the conversation today, how very small actions, very small decisions by the Fed, by the government, by Tesla, by Apple have those especially entities like that, have very large ripple effects. But it really does boil down to much smaller things that have just as big ripple effects. So chaos is something that we have to actively manage, and something that we have to weave through, because chaos isn't something that we aren't supposed to understand. The chaos is something we can understand, and it's on us to gain the information to do so. Second, crowd behavior reminds us that we're all influenced in some way by the herd, whether we realize it or not. We see it when it comes, like we talked about, when it comes to market sentiment, and avoiding the crowd sometimes. But you don't have to always avoid the crowd every time, because the crowd is sometimes right. But again, the point is obtaining information to make informed decisions on your own, without other parties swaying your decision-making process. And third, understanding these concepts isn't just intellectually fascinating. It is incredibly practical, especially for traders like you and me, as we discussed today. If you want to go back and find the practicality, the practical protocols that we talked about when it comes to utilizing these concepts to amplify your trading, go back and listen to the part in which we talked about the mechanics of TradingView and implementing top-down analysis in your trading. If you enjoyed today's episode, actually, Marks, do you have anything to close out the episode with? I don't want to.
I was just gonna say the Bloom principle. Did we go over that? Our Bloom principle.
The Bloom principle. The Bloom principle. I do, in fact, have a Bloom principle.
Wasn't in
of the episode.
Embrace uncertainty, I believe.
It is embrace uncertainty.
I think that's just beautiful. We can just leave that. Embrace uncertainty.
Embrace uncertainty. We have to be okay with being uncertain and throwing ourselves into the fire and not being afraid of the work and just going for it.
Yeah.
Even though it's uncertain.
Yeah.
Like Myron Golden said, we're going to do something. There's going to be an outcome eventually.
Yeah.
So I'm all matter of the input.
And even, damn, I lost it, but I'm going to get it back because it was good. It was good. And it's almost, of course, we don't want to lose, right? We don't want to lose in life. We don't want to take a risk and fail. Mm-hmm. That's not what we want. It's not our ideal outcome. But the more that we seek an outcome, and the more, and so when you embrace uncertainty, you take as many chances as you can stomach until you figure out, oh, this one works, and now you take off.
Yeah, take off. Simple as that. Simple as that. I love it. I love it. Thank you, everybody who tuned in to this very first episode of the In Full Bloom podcast. Make sure to subscribe, leave a review, and if you have any questions or topics you want us to cover in the future, send them our way, put them in the comments, give us a follow on Instagram, at Bloom Entities for the business side of things, In Full Bloom Show for the podcast side of things. Send us things you want us to research, look into, give us some work to do. But until next time, stay curious, stay informed, and keep thriving in the chaos.